for the obvious reason. So then we'll start. Very delighted, like I said, to welcome Michelle and Anna as our experts in the respective regions to talk about today's topic. Again, I think regulation, crypto, it's almost like you can, talk about crypto without mentioning, what's going on with regulation. So I think I'll start with maybe having our guests just give a couple of minutes introduction of who they are, who their company and firm do in the space, and more importantly for the audience, how did you get into crypto? So maybe I'll start with Anna and then go to Michelle. Anna, go ahead. Yeah.
Okay. Thanks, Michael, for having me. Hi, everyone. Pleasant to be here. My name is Anna. I look after the legal team in Hashkey. I joined Hashkey in 2018. Prior to joining Hashkey, I had worked with Tencent for a few years as an M&A in-house legal counsel. And prior to that, I was with an US-based international law firm, mainly engaged in Hong Kong and overseas capital market related. Hashkey Group is an end-to-end crypto financial services group in Asia. Geographically speaking, we have our headquarters in Hong Kong, and we have operations and businesses in Japan and Singapore. In terms of the business we are doing, we provide a wide range of services, including a crypto exchange, a brokerage platform, institutional grade custody services, crypto staking services, and crypto fund investment, that is the Hashkey Capital. We aim to provide a complete ecosystem across the entire crypto landscape and deliver security and performance to professional investors who intend to widen their exposure to digital assets. Speaking of the opportunity to get into crypto, I think it was in 2016. At that time, a friend showed me how to transfer ETH from other, and he transferred a few ETH to me. At that time, ETH was just around like US dollar, like $8. So in
wow.
I'm regret that I didn't purchase more, So in early 2018, ETH reached nearly, I think 1,400, which increased almost like 200 times within 2 years. So this is kind of new class of asset, and it's very attractive. I believe that many people doubt on that, maybe because lack of knowledge, it's easily to lost, and maybe lack of regulation. But I thought it was a promising direction. And I think the truth is that crypto, like other technological achievement, is not inherently good or bad. The most important thing is that you need to better understand this new class asset so that you form your own opinion and make investment decisions. Thank you, Michael.
Thanks, Anna. Wow, I mean, if you had more ETH back then, maybe we don't have even to do this call today. Kidding aside, Michelle, over to you. Tell us a little bit, the audience, about yourself, your company, and how did you get into digital assets, crypto business arena? Yeah.
Sure. Thank you, Michael, and thanks for inviting me to speak here today. It's been lovely, meeting and learning both from you and Anna in our short time that we've known each other, and it's a privilege to be speaking to all of our attendees. I'm Michelle Gitlitz. I am the General Counsel of Flexa Network, Inc. We are the global leader in pure digital payments. We offer the fastest, most fraud-proof payments network in the world. We offer our services to merchants who want to be able to facilitate their customers spending cryptocurrency at their stores or online, and either receiving cryptocurrency as the merchant or receiving fiat currency, whether that be US dollar or some other currency, depending on the country in which the merchant operates. Our network supports 99 digital assets, and our goal is to support the growth of digital asset payments and reduce friction in the industry and reduce costs to merchants in their transactions. Credit card fees, things like that are very, very high. The payment systems have a lot of pain points and a lot of fraud and a lot of chargebacks, and we're solving those problems. How I got into crypto was a little bit of an accident, but a lot of on purpose, I would say. I went to a party in 2015, and people were talking about blockchain, Ethereum, and Bitcoin. And I say those three words because they never said crypto. Crypto was a word I learned about later. And I had never heard of blockchain or Ethereum or Bitcoin or mining. And I listened to these primarily hedge fund and second managers and secondary market traders who were so passionate about this new technology and this new means of exchange and this new way that, as they described at the time, was going to disintermediate the financial services industry and cause a revolution in the way that we think about money. And I left that party finding myself very curious as to what this was. And the more I read, the more interested I became. And I spent a lot of time at meetups in Brooklyn and in warehouses and lots of different places, learning from lots of people in the industry who were just very generous with their time. I have no computer science background, no coding background. I come from a traditional financial services background. But it was really just interest. As long as you had interest, people were really happy to explain it to you. And I just fell in love with the industry. And I was in private practice at some large law firms for a number of years. And in October 2021, I went in-house to Flexa, which had been one of my long-term clients.
Great. I think both actually, of you, Anna and Michelle, enter the industry. So actually, not now. It's been more than a few years. So that's so I'm sure you've seen some of the evolutions and come and goes in the industry as well. So yeah. So and then thank you very much for that. And just a word to the audience, the attendees. Just again, given the experience last time where, the panelists just have a lot of, good stuff to say. I don't think, we'll have a lot of time for a proper Q&A session today. That being said, during this session, while listening, if any of the attendees have questions about crypto legal regulation, I suggest maybe you can shoot me a quick email. And I'm just going to put up my email on the screens for those who can see. So it's michael.chen@hashkey.com. So maybe that's easiest. If any of you during this session, feel free to shoot me a quick email and relay the question to me, and I will try to squeeze in and ask our guest. But of course, happy to address any questions after the call separately as well. So just going to put up again my email, michael.chen. That's Chen with an E like Eric, at hashkey.com for those who want to send me a quick questions. So let me go to the first questions that I have for the panelists. So I think, again, today's topic is crypto regulation, in the US and in Asia. I think the first thing that I want to understand is, who are the regulators, right? That regulate what we define as cryptocurrency or digital assets. Again, even the definition of crypto might differ as well, right? I think my definition probably just be, who is regulating the buy, sell, ownership, or transaction using, digital assets, or what do we call as crypto? So maybe again, I'll start with Anna again. Again, I think Asia is a big place. When we see in Asia, I think what I want Anna focus on maybe just sort of two places in Asia, namely Hong Kong and Singapore today for brevity. So maybe Anna, the first question to you is, maybe have the audience understand, when it comes to crypto, who are the regulators in Hong Kong and Singapore, respectively, for all things crypto and digital assets?
Thanks, Michael. I think before going to Hong Kong and Singapore, I can maybe just give a little introduction of the whole Asian market. So I think in the past few years, cryptocurrencies in Asia experienced rapid growth. So regulators inevitably had to start paying attention to this industry, primarily due to the increasing number of companies offering crypto-related services. I think the overall perception is that most Asian countries recognize the benefit of cryptocurrency adoptions, like low transaction cost, particularly for remittances. However, they are concerned about the implication of cryptocurrency in terms of money laundering and terrorism financing, and demand more rigid rules to protect customers from crypto-related services. Currently, I think crypto laws and regulations are inconsistent in Asian countries. The regulatory framework is varied across the board. And as you mentioned, we can't speak of all the jurisdictions in Asia because we have too much to say and too less time. So I will focus on Hong Kong and Singapore in this call. In Hong Kong, this is spread between a number of different bureaus, depending on what's being regulated. First, I would say the Hong Kong Monetary Authority, which is Hong Kong HKMA, we call it. It is the city's central bank, determines whether or not the digital asset is considered as money. And that's why it has jurisdiction over stable coin. Also, it regulates the industry from the perspective of promoting the stability and integrity of the financial system. Also, there is the Securities and Futures Commission, which is the very famous SFC. So SFC is Hong Kong's market regulator. It regulates those virtual assets that are securities and future contracts, which with the purpose of protecting investors' rights and interests. And furthermore, at a higher level, the industry is regulated by the Financial Services and the Treasury Bureau, which is FSTB. It is the Hong Kong's policy bureau. It is developing and executing government policy on finance and treasury and setting out more generic rules in this industry. That's for Hong Kong. I think Singapore, in contrast, has created a separate framework under the Monetary Authority of Singapore. MAS is a hybrid of central bank and financial regulator. It specifically addresses all the licensing framework and licensing requirements of companies that want to set up a business involving virtual assets. Yeah, I think I will just stop it here, Michael.
Yeah, no, a lot of good acronyms. I think large number of our audience, I think are probably based in Asia. So I think they probably have some level of familiarity with, the acronyms of MAS or SFC. So those are good to know. Michelle, over to you. Obviously, US has always been on the forefront of innovations and regulations when it comes to cryptocurrency and digital assets. I must say, I think a lot of countries outside of the US, namely Europe and Asia, are probably looking to the US to see, is there been a playbook, when it comes to regulatory regime. So I think I would love to know, I'm sure the audience does as well, who are the regulators, in the US when it comes to, digital asset cryptocurrency, and that buzzword of interagency collaboration probably used a lot both in FBI movies and also in cryptocurrencies. So help the audience understand who are the actors, actress in this movie.
It's a great question. I usually like to refer to it as our alphabet soup of regulators. We have a lot of different state and federal regulators who all want to be part of enforcing or enacting laws that apply to crypto. In the US, we have the federal regime to which every company and every citizen is subject to. And then we have the state regime. So if you live in New York, your laws related to crypto may be different than the laws of someone who lives in or operates in Arizona. So on the federal regime, we have the Securities and Exchange Commission, the SEC, we have the Commodities Futures and Trading Commission, the CFTC. We have the Office of the Comptroller of the Currency, the OCC. We have the Financial Crimes Enforcement Network. We have the IRS, who wants to make sure you pay your taxes on your crypto transactions. And before I go further, the SEC is looking at regulating securities and those issues that surround tokens they view to be as securities, which is basically, they've come out and said multiple times, we think most cryptocurrency tokens are securities. We have the CFTC, which generally regulates certain types of commodity transactions. And traditionally, the spot market in crypto has not been regulated by the CFTC, but there have been discussions about potentially regulating the spot market for cryptocurrency. And then we have the Office of the Comptroller of the Currency, which is our Treasury Department. And that's where all of our banking regulations come out. And that's where a lot of the discussion surrounding regulation of stable coins has come from. And then we have the Financial Crimes Enforcement Network, which deals with the administration of our Bank Secrecy Act to make sure cryptocurrency projects aren't facilitating the financing of terrorism, money laundering, and of course the IRS, who wants you to pay your taxes. That's not an exhaustive list, but I think it's probably the top of the pack. And then we also have the Consumer Fraud Protection Bureau, which is, what disclosures should crypto companies be making with respect to their products, and the Federal Trade Commission, and what advertising disclosures need to be made. Anyone on this call who may have watched the Super Bowl, there were lots of
Matt Damon.
Yes, there were lots of cryptocurrency companies who had ads during the Super Bowls, and you saw some pretty robust disclosures, and that was usually pursuant to what our Federal Trade Commission expects you to disclose about financial products. And then, as I mentioned, each state has, certain laws. You've probably heard about investigations into various projects that, like BlockFi had entered into a settlement and had released information that was being investigated by certain states, Celsius, about these interest-bearing products and whether those products were subject to regulation by the state securities commissions. And then we have the money transmitter laws, which govern mostly the payments industry, but the transmission, the receipt of money or some currency of value from one person and the transmission of it to another person. So we have a lot of regulators. And Michael, when you say interagency coordination, I'm not sure that's been entirely that coordination is necessarily the word I would necessarily use, but I think under our current President Biden, he has definitely taken great pains to encourage interagency coordination, and our Treasury Secretary, Janet Yellen, and our OCC Comptroller, Michael Hsu, there's definitely more inner workings between the various regulators I've discussed. but still not a ton of interagency guidance.
Is there like a sort of, I mean, is there a plan for like a super regulator on top, just coordinates everything around crypto and digital assets in the US?
There are ideas. There's not a holistic plan. The president's working group on cryptocurrency came out with a report a couple months ago. I believe it was in January, that fleshed out some of the issues relating to the industry. There are some thoughts about creating a separate regulator to regulate the industry. There are thoughts about having potentially a chief regulator, potentially the CFTC, who would take more of an active view, or the OCC, who's really administering the Bank Secrecy Act, and making sure that national security isn't threatened by the use of crypto. So that's still a bit TBD. And we all read and listen to the speeches of various regulators with great interest. But I can tell you that in terms of legislation, since I was in Congress in 2018, talking to some senators and representatives from the House about the need for cohesive crypto regulation, and it's 2022.
Well, for crypto, that's like 20 years. Cool. I want to thank you, Michelle, for that. I mean, it sounds like there are, again, like you mentioned, alphabet soup, right? There's a lot of acronyms there in the U.S. Trying to establish a cohesive or coherent framework, and it sounds like it's still in the work, so to speak. I want to go back to Anna, go back to Asia, again, Hong Kong and Singapore. So now we got a lay of land of who the regulators are in those two respective places or jurisdictions. And could you talk about, again, the evolution or the change of, I would say, let's call crypto regulations in those two places? Namely, I want to get a sense of, where the crypto regulation were, let's say, a couple of years back, and where they are now, and whether you've noticed any changes in sentiment or changes or anything like that. I just think, somebody who works at Hashkey Capital, and I think, last couple of years is really the coming out of, I think, crypto among sort of regular average participants, or really was, the rising of NFT, so to speak. It's a coming out party for crypto. So I think general, whether it's investors or just consumers' perception of crypto seem have changed a little bit in the last few years, I noticed. But I want to maybe, Anna, give us a summary of, again, just what is the current regulatory landscape in Hong Kong and respectively in Singapore, and whether you notice the regulatory, sentiment has changed or not from the past where they were to where we are now. So Anna, to you.
Thank you, Michael. I think that is a very important and very good questions, and then definitely it will give our audience a brief picture on what's happening about the regulators in the past. So in Hong Kong, I think Hong Kong has gone from having minimum regulations of cryptocurrencies to where the government now plans to outline this industry. Currently, there is no specific legislation aimed to restricting cryptocurrencies in Hong Kong, but the SFC regulates anyone involved in trading of cryptocurrencies that fall within the definition of securities and future contracts under the Securities and Future Ordinance. Current regulatory framework for virtual asset in Hong Kong, I'll try to make it short. I think it basically covers three main categories. So first one, it regulates crypto fund management business. That is exactly what Capital is doing now. So in Hong Kong, asset management is a Type 9 regulated activity. Asset management is defined as the management of securities or real estate. Managing a fund investing only in cryptocurrencies, which are not securities, is not an asset management activities, and therefore does not require a Type 9 license. However, to a firm which is already licensed for Type 9 regulated activity, if it plans to manage a portfolio which invests in cryptocurrencies that are not securities or future contracts, it will be subject to the SFC's oversight. The SFC exercises oversight over a firm's crypto-related activities through the imposition of licensing conditions. I think the criteria is that whether the fund intends to invest 10% or more of its gross asset value in virtual assets. If no, the fund manager may need to just notify the SFC to just simply update its business plan. But if yes, then it will be subject to SFC's imposed licensing conditions and apply for an uplifting of its current Type 9 license. That's for, I think, the first type. The second one will be, I think it will regulate distributors of crypto funds. So in Hong Kong, if you want to distribute a crypto fund, you need to apply for a Type 1 license, which is dealing in securities. It is because a fund is a collective investment scheme, which is a security, regardless whether the fund invests in crypto, in virtual assets that are securities or not. In January this year, the Hong Kong MA and the SFC imposed additional requirements on the virtual asset fund distributors, including setting selling restrictions of letting them to distribute to professional investors only, and request them to maintain a proper KYC procedure and VA knowledge test. And maybe require them to conduct proper due diligence on virtual assets and ensure there's adequate disclosures to clients. So foreseeable, I think they will be subject to higher regulatory standards. And similar standards also apply to existing SFC license holders who plan to distribute traditional securities products and provide securities advisory services. Say if they want to engage in distribution of virtual asset related products in addition to the current traditional work they are doing, then they will need to follow the imposed additional requirements as well. That will be the second type. The third one, I would say, that will be the trading platform operator. So the activities of crypto trading platform, which only provides trading services in non-security tokens, will fall outside the SFC's jurisdiction. The SFC currently adopts a opt-in approach to regulate this trading platforms. And under this framework, the platform should operate a centralized online trading platform in Hong Kong and offer trading of at least one security token on its platform. The platform operator would then fall within the jurisdiction of SFC and require a license for Type 1, which is dealing in securities, and Type 7, which is providing ATS, so automated trading system regulated activities. I think I'm also happy to share that in April, Hashkey, we just obtained an approval in principle from the SFC for running a trading platform under Type 1 and 7 license. And after all conditions are satisfied and after we receiving the final approval, Hashkey will become the second licensed virtual asset trading platform. I think that's basically what is happening in Hong Kong. In Singapore, I'll try to make it short. So I think the development of regulation for crypto has been, I think, steadily occurring over the last few years. Cryptocurrencies are not being treated as equivalent of money of Singapore. And depending on the characteristics of each cryptocurrency, it may be treated as regulated products such as the digital payment token, capital market products, and e-money, or else it may be treated as an unregulated digital token that is strictly used for utility purpose only. I can briefly introduce maybe two major crypto relevant regulatory regions in Singapore. The first one will be the Securities and Futures Act region. So under this region, cryptocurrencies could potentially have similar features as the conversional type of capital market products. And therefore, the conversional requirements could also apply to such cryptocurrency. And the other would be the Payment Service Act region. This region actually is quite new and has been like discussed around the community. Actually, the PSA region, it requires a person who carries on a business of providing a payment service to obtain a payment license. There are 7 payment services defined in the PSA. And I think the two related to cryptos are e-money issuance services and DPT services. Speaking of DPT services, I think so the current scope of DPT service is quite narrow. It only includes a service of dealing in DPT or a service to facilitating the exchange of DPT. However, in I think last year, I think January 2021, amendments to this Payment Service Act have been passed in Parliament and is still pending effectiveness at the moment. I think the biggest change is that it's about expansion of the definition of DPT services. So in addition to the two I just introduced, it further added a few activities onto the regulators radar, such as the transfer of DPTs, provision of custodian wallet services for DPTs, and facilitating the exchange of DPTs without processing the money or DPTs. So foreseeable, more type of services will be included going forward, right? I think that basically explains the trend and is the general picture of what has been happening in Hong Kong and Singapore. Michael.
Thank you, Anna. Wow, there's a lot there to unpack. I think just a word to the audience, for those who are writing down notes or trying to write down notes, but maybe the signal isn't that great. We will have a replay available for this call. So for those who are really interested in the details, but couldn't write down everything, feel free to click on our, I believe it's on YouTube channel. In the Web2 world, there will be a replay available on this call. So Michelle, over to you. Again, there's similar to, I think, when I said about Asia, this is probably a big topic, but again, I'm sure the audience would love to hear your thoughts just on the regulatory landscape on crypto and digital assets in the US, where they were and where they are now. And, what are some of the key insights or takeaways that you want to point out to the audience today?
Sure. So I don't think that the core regulatory landscape has changed in the US necessarily as the way that it may have changed in Asia. For the test for whether a token is a security, the courts and the SEC are still using a test that was developed in 1946. And that's what we apply. It's called the Howey Test. And the case was about whether plots of orange groves were investment contracts. And that's the test that we're applying to determine whether a cryptocurrency token is a security. On the other hand, regulators like the Financial Crimes Enforcement Network have, over the years since 2013, that have put out guidance and good guidance that really tells the market how to comply with the Bank Secrecy Act. First, clarifying that the Bank Secrecy Act was applicable to cryptocurrency as a medium of exchange, and then to provide additional guidance on how to apply the Bank Secrecy Act to cryptocurrency. I think what we've also seen is an increase in enforcement actions by various regulators. For example, the IRS back in, I believe it was 2016, was sending subpoenas to or requests for information to Coinbase for records to see if people who were trading crypto on that exchange were in fact paying taxes. And there was a little bit of a tussle as to whether or not the information would be provided to the IRS, and also the form of the information, because your Coinbase account, unlike potentially a brokerage account where you might get statements, we don't get statements in the mail in our Coinbase account the same way we do sometimes for a brokerage statement or even a paperless statement. So I think there's been some changes with respect to compliance with the regulations, not necessarily new regulations, and then interpretations with respect to the regulations. Perhaps, in another year, we might have a different conversation that there are, in fact, new regulations that apply to crypto. There are lots of bills have been introduced in the House and the Senate. None have been passed, but I'm cautiously optimistic that we could get some robust regulation. I know that I've spent some time with some senators and some representatives about how to craft the regulation. What's the definition? What's a good definition of a digital asset? Our staking, if you're talking about staking, our staking rewards something we tax, the transference of crypto. When is that transfer a taxable event versus a non-taxable event? So lots of ideas floating around, but I definitely think that we've not had necessarily a change to existing regulations, just an application of crypto to those older regulations and case law.
Got it. I think. Thank you, Michelle, for that. I think before I proceed to my next question, I'm just going to, stir up the pot a little bit. Get a little bit controversial question in there to wake up the audience if any of the audience didn't have enough morning coffee. One question to both of you. It just feels like, globally speaking, there is some level of just discomfort, or some might even say distrust, when it comes to crypto by the regulators. So my question to both of you is why? First of all, is that true? And if you say it is true, why do regulators dislike or have some level of discomfort when it comes to crypto? And maybe I'll continue with Michelle and then go to Anna this time. Just a quick question, couple minutes concept. Let me know if you agree with me. I'm sure the audience would have a different view, but I just get a feeling that, again, I'm no legal expert, but there's this, guilty until proved innocent kind of saying as an old adage, but just feel like when it was crypto, there's something there. The regulator's like, whoa, are you doing something right? So maybe, Michelle, do you feel that way? And if so, why do you think that might be the case? Yeah.
I think that's an accurate depiction of how some regulators do feel. I think if you go back to the sort of biggest story about crypto, it was Silk Road, right? It was this massive theft and misuse of crypto that the FBI ended up, hacking this illicit organization that was, and the U.S. Attorney's Office prosecuted members of Silk Road. And I think that crypto has been associated with those bad and criminal acts. I push back on that because I push back on that in the way of the only possible way that the Silk Road criminals were caught was because the FBI learned how to analyze the blockchain. Okay. And had those transactions been done in cash, and similarly, when we had the pipeline extortion, a couple of, I think it was a year ago or 2 years ago, where it was the hackers were going to shut off the pipeline if ransom wasn't paid, and they demanded payment in crypto. 3/4 of that money, of those ransom payments, were recovered because the government was able to trace the transactions through the blockchain. So you can say that crypto is used for illicit purposes, just like cash is used for illicit purposes, but you can't trace the cash because there's no ledger that shows you where the money could have gone. So I think part of it is a fundamental sort of bad press from the start of when we started hearing about it in the mainstream news. And then I think the second piece is new technology, new anything makes people uncomfortable sometimes. I remember being a junior associate at a law firm and having partners who refused to email because the email was new in 2004. And, you had
that partner is having a lot of ETH in his or her wallet.
Right. And there were people who said, well, I'm just not going to use email. I mean, it would almost be ridiculous to say I'm just not going to use email today. But for crypto, you can't touch or feel it. It's hard to understand sometimes in concept, but I don't actually know how my email gets from you to Michael. I don't need to know. I just know it does. And in a lot of respects, I tell people who are skeptics of crypto because they don't understand it, you don't need to know everything about it, and you don't need to touch or feel it. You just have to have enough understanding to have some trust in it. And some people will trust it, and some people will never trust it. So I think that answered your question.
Yeah. Anna, you want to care to comment on that a little bit for a couple of minutes before we move on? Yeah.
I think, thanks, Michelle, I learned as well. So I think Michelle basically covers all the points that